And going back to your early days of trading, what were some really specific learning moments and kind of turning points in your experience and also your performance? How did you go from just starting to learn how to trade to getting 11,000% that year in 1987?
Well, the couple learning experiences. One, there were three of us that were tutored by a guy by the name of Bill Meehan.
Mm-hmm.
Uh, Bill did myself, Chet Conrad, and the Campbell brothers, and I owned the Campbell funds in Baltimore. And Bill really taught all of us separately. I paid Bill a lot of money to come to Carmel Valley and teach me what he knew. He'd been a former member of the Board of Trade. And Bill was a very long-term fundamentalist. And I
Mm-hmm.
had just been a technician. The reason we got together, people said, Larry, you got great timing, but you don't have a clue where the market's going. He knows where the markets are going, but he doesn't know when. So you guys got to get together. And we did. And that was just a huge, oh my gosh, what a valuable thing. Bill was a very unique guy as well. To learn from him a lot of things beyond just the markets, but he taught me about the commitment to trader reports, premiums in the market, squeeze plays in the market. And Bill was very instrumental in giving me a fundamental concept to apply with a technical concept. The
For
breakthrough,
sure.
though, that came from very short-term trading, these spectacular gains that people saw, was I had the idea, it's now very popular, volatility breakouts.
Mm-hmm.
About 1982, maybe 83, I came up with the idea that what was really important is how markets move from the opening price. Way back in the 70s, I did a measure of accumulation, kind of like Granville's on balance volume. But I looked at the volume change from the opening of the day to the close of the day. I always think the opening is an important figure. So then I noticed that, and this is still true today, markets, a big range up day that closes on its high, so they have a big day blast off, they
Mm-hmm.
almost always open on their low. A
Mm-hmm.
big downrange day almost always opens on the high. So my theory is if we have an opening price, we just bracket that a little bit above and below the opening, and whichever way it goes, for a big range day, we're going to catch a big move. So that volatility breakout was a huge. I did a paid system that I taught some people, and a lot of people, a lot. It's really interesting. Made over $1 million trading it, as I did. The bad news, the electronic markets came around where you don't have opening ranges anymore. They're not important because in the old days, we would close tonight and open 8 hours later in the morning. We'd have these big gaps. And now we close and a couple hours later, boom, we open again.